Hello, everybody. Today we're going to be talking about SMT Divergence. Let's get right into the video. As you guys can tell from the intro, SMT Divergence is going to be a very simple concept that can level up your trading. So hopefully this helps for you guys. I really hope so. Let's get right into the video. Alright. Way too fucking tired for this shit. Alright, boys. Time to get after this SMT. S&P makes lower lows. Wait. Nasdaq makes higher lows. Or, wait, bear with me on this one. S&P makes higher lows. Nasdaq makes whoa. 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 Oh, wait. Oh my god, I'm gonna add a little bit something else to it too. No. It can be the other way around too. Okay, so S&P, in order for SMT to happen, S&P makes higher lows and then or higher highs, and then Nasdaq makes lower highs. So for instance, say this is Nasdaq, boom, lower highs. Say this is S&P, higher highs. S&P has to go down and Nasdaq is already like S&P is going to be the better trade. So, for instance, yesterday there was a clear hourly SMT divergence. So as you guys can see, here is where market was yesterday. I'm pretty sure you guys can see it. I'm pretty sure you guys can see it for when it's happening. But if you guys can't, Nasdaq makes higher highs. S&P makes lower highs, meaning Nasdaq is going to have to go down where S&P is. So, your favored trade for that day is whichever one you is higher. So like for this, Nasdaq was higher, ES was lower. You're going to favor Nasdaq. And say this is a bearish SMT. Say it's a bullish SMT. You're going to favor the one that's lower because you're going to get a better risk to reward, you're going to get better everything for that trade. And SMT happens a lot more frequently than people would think, but if you're looking for a trade in here, simply it's honestly there was a couple that you could have done. The one major one that I saw, order block, breaks out, retests it, bam, shoots down. You would have gotten in right here. And then target the 15-minute. and then bam, that would have been your trade. And it's like you took this because there was an SMT divergence. You took this because there was an order block for your another confluence. And then look at the S&P. It's way lower than NASDAQ. And NASDAQ has to follow S&P for SMT divergence. So NASDAQ has to go down because S&P is already down, meaning NASDAQ has to do the same exact thing. And it has to match your bias. Without your daily bias, SMT is absolutely pointless. Because there will be days you're like, oh my god, I literally see another one. So, say your bias is bullish, which it shouldn't have been yesterday, but say it is. Market opens right here. What do we have? We have higher lows right here, and I missed it. Never mind. So we have higher lows right here, and then on ES, what do we have? We have lower lows, and it's right at market open, so it still counts, but it doesn't match your bias, so it doesn't matter. Because if you guys are going into Tuesday and you guys are following my strategy, you would have been like, it has to take out hourly liquidity. And look what happens. Market opens, takes out these hourly highs right up here, meaning your bearish or your daily bias is gonna be bearish, meaning this bullish SMT doesn't matter to you because it doesn't match your bias. And that it's really just kind of that simple, honestly. Um, I deleted all my drawings. Shoot. Please tell me my drawings are here. And all my drawings are gone too. But SMT has to match your daily bias. If it doesn't match, it doesn't even matter. And with that, SMT can be on the 1 minute, 5 minute, 15. It can be on any single time frame. It literally can be on any time frame. And you can take it as an entry, you can do it as anything. I took a trade on SMT on the 5 minute a couple days ago, and it ended up not working, but I mean, it's just name of the game. But it's like SMT is going to be super simple. All it is you're looking for ES and NASDAQ, one to be higher than the other one or one to be lower than the other one. And if it's not the case, then you don't have an SMT. So it's like you can simply go down to the 1 minute The 1 minute isn't as trustworthy. Um, so it's like here. 49. I mean, what do we got right here? S&P's lower. Like, literally, NASDAQ is way higher. So we already have an SMT divergence right here. Like, a big time SMT divergence. And what could you have done? You could have taken it. You could have literally just went like this. Or you could have taken it off of this inverse fair value gap. And you literally just could have taken SMT and shorted down to wherever you want to go to. Like you could have went to these 5 minutes. You could have went to this previous 15 minute because market slammed through it, but then it never retested it, and you probably wouldn't have wanted to target it all the way down here because that's a far ass TP. But it's like SMT can happen whenever. I mean, I'm showing you guys examples in one singular day. Like, I'm not showing you examples from, 30 days ago, 20 days ago. Like, I'm literally showing you days from yesterday. The one major key part, though, about SMT is it has to match your bias. No matter what, if it doesn't match your bias, it doesn't matter to you. And you can do this on any time frame you would like. I personally do it on the 5 minute time frame every single time because it keeps me only looking at the 5 minute and not looking at the minute or the 15 minute or the hourly. Like it's just kind of my like how I do this. But you can use it as however you would like. And if it doesn't happen when market opens, it doesn't matter to you because there's going to be SMT divergence at 7 in the morning to 8 a.m. And then if market opens, like my market open is 8:30. So if market opens and it's 8:30 and there's SMT before that, I'm not going to care about that. I'm going to care what my daily bias says. I'm going to care what everything else says. And if it doesn't match my daily bias, I'm not going to care about it. I'm not going to hesitate to get into a trade if there's bullish SMT and I'm bearish for the day, or if there's bearish SMT and I'm bullish for the day, because if it doesn't match your bias, it's most likely not going to work. So it's like you don't need to worry about, oh, there's a bearish SMT and I'm bullish for the day. I'm screwed. No, you're not. It's just that it formed that, and it's not going to matter in your trade. But it really all it is higher highs on one of the indexes and then lower highs on the other index, or lower lows on the one index and then higher lows on the other index. And it can be either index, it doesn't matter, but that's all you guys gotta know for this. And you don't need to overcomplicate it more than that. And yeah, that's all I got for you guys today. So thank you for watching. Hopefully you guys like my new chart, orange and white. I decided to change it because I don't know, it looks cooler. But yeah, that's all I got for you guys. Thank you for watching.